TARIL, Transformers and Rectifiers. The company specialized in power and distribution transformers and transmission energy. Hello everyone, welcome back to my channel. Today, in this video, I am going to analyze the long-term investment analysis on TARIL. In this video, I am going to analyze the company outlook, revenue analysis, analysis on ratio, cash flow analysis, valuation of stock, competitive advantage, and risk analysis of TARIL. This analysis is for education purpose only. Investment in the stock market are subject to market risk. Please do your own research and consult your financial advisor before making any decision. Before we start, don't forget to subscribe our channel for IPO details and stock market updates. So let's get into it. TARIL is a leading India power equipment manufacturing company. It was established in 1994 and the main products of TARILs are power transformers, distribution transformers, rectifier transformers, furnace transformers. TARIL's customer base includes major government utilities like Power Grid, NTPC, along with large private sector companies such as Adani Group and Tata Powers. The company is also exports its products to international market, having both private and government clients. It indicates strong credibility and diversified revenue sources. Next, we will move on to the revenue performance of TARIL. In financial year 2021, the revenue was 7,421 million and financial year 2025, the revenue is 20,194 million. What it indicates? It indicates steadily increasing the revenue year after year. And you can see here CAGR. CAGR means compound average growth rate. It is 28.6% per annum per year. So this is our benchmark. 10 to 15% it shows good revenue. 15 to 20% shows strong revenue. About 20% is excellent revenue of the company. So see, our CAGR is falls 28.6%, which means it is between 15 to 20%. It shows strong revenue growth in the TARIL company. Let us analyze the PAT performance of TARIL. From financial year 2021 to financial year 2025, it is steadily increased year after year. You can see here. So in 2021, the PAT was 7.63 crores and in 2025, the PAT is 216.44 crores. So what it indicates? It indicates PAT, that is profit after tax, is steadily increased year after year. Then you can come for CAGR. So CAGR is also improved. 127% per year is shows that very good improvements, a very strong growth rate driven by accelerate profitability in later years. Next, looking EPS performance, we can see strong uptrend from financial year 2021 to 2025. See, the sharp improvements in financial year 2025, it reflects the better profitability and operational efficiency. The CAGR, 113% annual rate. So it shows a very strong growth in EPS. So earning higher EPS growth is equal to gives a better return to the equity shareholders. Now let us look over the ROE of TARIL. What do you mean by ROE? ROE measures how efficiently the company is generating profit from shareholders fund. So here you can see from 2021 to 2025 it has been steadily increased but slightly dip in 2024, that is around 8.03, then it is makeover in 2025. This is our benchmark. Above 15 is good, above 20 is excellent, but this ROE is falls under the category of above 15, which is good ROE. Next, we will move on to the return on capital employed. Return on capital employed measures how efficiently the company is using total capital, which includes debt and equity. You can see here financial year 2021 it is 11.22% and financial year 25 it is 24.24%. What it indicates? It indicates year on year the ROCE is improved. So this is our benchmark. Usually we prefer the ROCE is above 15%, but TARIL gives 24.24%, which is considered excellent. And financial year 2025 performance indicates a strong capital efficiency. Next, we will move on to the debt analysis, that is debt to equity ratio. Debt to equity ratio tell us how much debt the company is using compare shareholders fund. See, year after year, the debt to equity ratio is gradually decreased. So this is our benchmark. Debt to equity is greater than 1 is a moderate risk. Less preferably, the debt to equity ratio is less than 0.5. So lower debt is equal to lower financial risk. So TARIL is indicates a lower financial risk because the debt is gradually decreased year after year. It shows the lower financial risk. This is the valuation matrix, and TARIL is going to compare with the other peer companies. PE ratio is when compared to other peer companies, the TARIL company PE ratio is moderate and it is above industrial average, and PB ratio is seems least in the list of the peers after Amara Raja Energy, and when compared to industrial average the PB ratio of TARIL is higher. So what it indicates, what it shows, the valuation premium relatively to some peers, strong growth expectation. TARIL estimated revenue growth CAGR looks strong in this list. ROE is least in this list, and ROCE is looks moderate. Debt to equity is also looks moderate, and PE ratio is higher than these peer companies. So what it indicates? Strong sale growth but weak profitability and expensive valuation makes this is a highest risk and high expectation stock. So TARIL's competitive advantage lies in its established relationship with government utilities and its capabilities of manufacturing customized high capacity transaction in a capital intensive industries. Risk. Key risk includes high working capital requirement, execution delay, pressure on profitability compared to peers. So what is the management quality of TARIL? TARIL management has demonstrated execution capability in securing large order, but sustained and improvement in profitability and capital efficiency will be key to assess the long-term management quality. Lastly, revenue growth is strong, but ROE remains weakness. And also, the market is valuing future expectation, not current performance. So, I personally felt that this stock is suitable for long-term investment perspectives. So, what's your opinion to invest on TARIL for long-term investment? Comment below on the comment box, and don't forget to subscribe our channel for notification. Thank you.